So a bunch of the advantages here that are you can take advantage of with your VA loan. First and foremost is your 0% down option. This is one, if not the only product still available that allows you to put $0 down for your down payment. And on top of that, it allows no mortgage insurance, which is definitely a monthly payment savings in your scenario. We don't have any income caps. So, for example, on a lot of our programs that can do like a 1% down or a down payment assistance, you cannot make over a certain dollar amount annually. VA loans do not have that. Okay. So you can make an unlimited amount of money and still qualify for a VA loan as long as you have that eligibility from the Veterans Administration. And then generally, you are going to need 2 months of liquid reserves left over once your, for your loan, after your loan is closed. What that means is that if your monthly payment is $2,000, lenders are going to want to see you have at least $4,000 left in your bank account, whether that's a savings account, checking, or even a retirement account. So as long as those conditions are met, that definitely is one of the advantages of this program. And again, it's no money down up to $2 million. That is huge. So in anything over $766,250 on the conforming side is what we would call a jumbo loan. Now, there are not very many jumbo loans that will allow you to put down less than 10%. So the VA will actually allow you to do 0 down up until a $2 million house. And again, that still would come with no private mortgage insurance. So all you're doing is you're paying your principal and interest and taxes and insurance and your homeowner's insurance on that property. And then if you were looking at it on the flip side, if you were doing a conventional loan or a jumbo loan, they would require 20% down in order to avoid that mortgage insurance. So there's, again, another great benefit to you as a veteran that you guys can take advantage of. There's also no prepayment penalties. So if you were to pay this loan off prior to whatever the term was, the 15-year or the 30-year, there's no prepayment penalty. So you're free to pay this off at any point in time with no penalty to you. And actually, once you do that, your VA entitlement gets reinstated. So then you can go out and if you wanted to sell this house or even keep this house as a rental, purchase another one and use that entitlement over again. Couple of benefits as well when you're using the VA, you have what's called a streamlined refinance. So if any point in time interest rates were to drop from where you're locked in currently, generally as long as you have not missed any mortgage payments on that property, we can go ahead and get that rate lowered for you and make this a very quick process. I mean, generally that'll take like 30 days. It's sending out the loan application, having you sign it, and then getting that refinance done and lowering your rate and payment. VA also allows for you to do a cash out refinance. So if you currently either have a veterans loan or do not, and wanted to be able to take equity out of your house, whether that's to purchase another property or to use to pay down debt or what have you, you can take that equity out using the VA loan. And that also goes up to 100% financing, which is unheard of in the business. Because right now, if you were doing a conforming loan, the max is going to be 80%. Okay. And on a conforming loan, if you do a cash out refinance, your interest rate would be higher than if you were doing a purchase. Whereas on the veteran side, the rate is not going to be affected by you doing the cash out refinance. Another tremendous benefit to this program. If you're in that scenario where you need to get money out of the house in order to either pay down debt, put a kid in college, or use that to invest.
And Sam, one thing we don't have a slide on is roughly what the rate differential is, at least today, between the, like, say, a 5% down conventional loan and 100% financing for the VA loan. I know you ran it the other day when we were talking about this.
Yeah, it's about 3/4 of a point difference. So let's say, for example, if you were doing 5% down on a conventional loan, you'd probably be at 7.25%. Whereas on the VA loan, you'd probably be at like 6.5%. So that interest rate savings is huge as well. And again, the reason that the rates are lower is there are no pricing adjustments for this. I mean, these are backed They're guaranteed by the government. So it allows us to not have those additional overlays and everything that some of the conforming loans will have when it comes to interest rates.
Yeah, so a lot of people will come in and say they want to put down 10% or 20% if they're VA eligible. It still makes a lot of sense to go with VA loan over a regular conventional conforming loan a lot of the time.